That's David Resler, chief economist at Nomura Securities. David, once again, proving why he is a Bloomberg best. Congratulations. His call on the Consumer Price Index for a rise of 0.3%. Right on the money. David, thank you. And how'd you do it? How do you get that precise?
Well, a little bit of luck, but also some good analysis of how energy prices were going to feed through to the CPI. But I must say that we missed some of the other things. Things generally were weaker than we expected, and the core rate was not up at all. It was flat. I think Mike had that wrong a second ago. It was unchanged from the previous month. It rounded to zero.
On a year-over-year basis.
On a year-over-year basis, it was also unchanged at 0.9. Right. And we think that year-over-year number is going to hit an all-time low later this year on a year-over-year basis, probably sometime in the next few months at 0.7 or so.
I want to talk to you about inflation. At the point we are right now, is that what you would expect for this point as we're recovering?
It's not what you would expect if we were recovering with job growth and a falling unemployment rate, but unfortunately it's probably what you would expect if you're recovering at a very slow rate and the unemployment rate is rising. So I think that's where the risk lies going ahead. We're going to see a higher unemployment rate in all likelihood in the next few months, and probably we're going to see further declines in the inflation rate, measured as a core measure anyway.
So do you buy the deflation argument?
Well, we're not in deflation yet, at least not definitional deflation. But a few years ago, economists were there have been many studies. The Boston Commission, Greenspan's testified to this effect, basically saying that you're at price stability when prices are rising at a 1.5% to 2% rate. Well, we're rising a lot less than that on an annualized rate, and that means we're probably in effective deflation. And we think we might get to de facto deflation if we don't get the economy moving a little faster.
When you look at the breakdown of the numbers, some are weaker, as you say, than perhaps you had anticipated, but most items in the CPI were going up. And the big problem seems to be, or has been over the months, housing. So if it's really housing that's pushing prices down, is the kind of deflation we might experience a real worry?
Well, what do you worry about with deflation? You worry about its impact on asset prices and on behavior. And if people believe that we're going to be in an environment where prices are going to be lower tomorrow than they are today, what are they going to do? They're going to wait till tomorrow. And that's going to become a self-fulfilling prophecy. And that's where the danger of deflation lies. And right now, you're right. It's largely confined to selected items, but across the board, we see price softness in the economy, and it may not take very much to push us from a generalized small rise to a generalized small decline.
David,
and we think for that reason the Fed's got to act, and probably will soon.
We're just about out of time. I just want to ask you about something. I was reading a quote you gave in April of 2009 comparing the economy to a boxing match. If that's the case, what round are we in here?
Oh, good question. If it's a 15-round match, and we need to get a decision in 15 rounds, we're probably only in about the 5th or 6th round.
All right, ways to go. Okay, David Resler.